Hello and welcome to Crypto Weeklies. In this video, we analyze the crypto asset performance and one of the major cryptos which is having some positive seasonality or momentum, which is Arweave. None of the content is financial advice. This is the performance barometer available on cryptoweeklies.com under the heat map section. Over the last 24 hours, largely every major crypto has been trending down. This is the top 50 cryptos which are exist for more than 5 years. Their price performance over the last 24 hours has been negative. Over the last 7 days, again, Arweave had some modest gain of about 1%. But apart from these three names, ICP, which we covered yesterday on our YouTube channel, again, all of these videos you can check it out on the home page from the homepage of the Crypto Weekly's website as well. We covered Chainlink ICP yesterday, Chainlink a moment before, and so on and so forth. So today we'll be covering Arweave. You can check out all of the Arweave related charts over or videos over here by keying in the term Arweave. You can check all of our predictions that we made thus far, and just to keep us accountable and verifiable of whatever predictions were made historically speaking. Now that Arweave has had some decent price momentum, so if we were to check Arweave related, all of charts related to Arweave you could find on the home page of the website itself under this top 100 cryptos, or you can also do a Command F or Control F and type in the name Arweave to search the content related to Arweave. We will start with the polynomial regression based interpretation, which is color coded in terms of the risk levels. Right now the price of Arweave and its token AR is at less than $4. It's kind of a disappointing picture for Arweave, where the lows for this cycle were again taken out, that the lows that were established in October 2023 at around $3.77 were taken out in this November 2025 drop, where the price went slightly more lower at around $3.55 than the October 2023 low. Again, that does not ring that positive sentiment or positive floor for Arweave's price. Again, that's why the polynomial regression model, again you can see the regression based fair value in this gray line over here, is trending down. It's a non-linear model where again the non-linearity in terms of price versus time is captured through this regression based interpretation with 4 degrees of freedom to identify what's the fair value of Arweave at any given point. Again, these cryptos do not trade like stocks, where the fair value is a function of any earnings or any product that they launch or that kind of revenue model. This is again most of the assets in crypto asset class, barring Bitcoin, ETH, and some of the other top names are largely speculative. So their fair value is better captured by this non-linear model. And especially as we move closer to this dotted dotted green line over here, that's when the value zone for Arweave's price action comes, again like in 2020, or whenever you see that it's proximate enough from the dotted red line, whenever it's in purple color, that is whenever the risk level is less than 0.1, you can do a toggle on or off from this level. This model has largely been correct directionally speaking whenever the Arweave token has been in an accumulation phase. Again, no model can claim 100% accuracy. You can see that in June 2025 at $4.70 this model said low risk, but again price did go slightly lower in 2025 October, or about $1 lower than in July 2025. So what remains to be seen is what are some of the risk levels of worth of some mention, historically speaking, where the price action did eventually go in the Euphoria phase. Again, it did go to about 0.8 risk level back in from March to June of 2024. That was the best time for Arweave in terms of the narratives garnering significant traction, as well as the price action consistently being above this $25 level and closer between that range between $25 and $50. Now it's a short, it's not even a shadow of its former self. Now the price action is almost 1/10 of that, from that $40 level to now less than $4 level. But still, what remains to be seen is what could what needs to happen for the price to have a positive seasonality. Per my interpretation, whenever price spends a meaningful number of days above the dotted red line, especially when we are in this precipitous decline in this fair value interpretation, that's when the price has the most chance to have a breakout from there. Because again, not all cryptos go to zero, but this angle of descent claims that if the projections were to continue, the price has this directionality in the future. But again, the reality often is different, especially with higher volatile assets such as cryptos. So what remains to be seen, if the price action stays meaningfully above, again, and if there is a breakout and if the price action stays meaningfully above the $6.21 level, then there is a higher degree of chance that what we saw in April 2023, of where the dotted red line bottoming over here and then having a bullish upswing, that needs about rally to about $6.25 for these things to materialize, and again holding that as support for a while to enable that change in the fair value, essentially like it did in the upswing. Kind of was confirmed when the price did go higher than the dotted red line in March 2024, from March to June 2024. So that's where the DCA model or the regression model says the intermediate stops, now that the price action is closer to that $4 level, the intermediate stops in terms of the risk at some of the price levels at 0.8. If we go to that 0.8 risk level like we did back in from about March 2024 till May 2024, then the price action has that potential to go to that above that dotted red line at around $6, between $6.20 and $6.40. So that's something to look forward to if there is a sharp increase in the price action in the coming days. The machine learning based models trained on the weekly price action or weekly average price action says that if there is a non-euphoria bull run peak for the remainder of November and December, and if there, let's say if the crypto rally last couple of weeks into January 2026, then there is still a chance for Arweave to go to that $10 level at a weekly average. Again, at the weekly average would be $9.28, but the actual price would be slightly higher than, likely be slightly higher than the weekly average price for any week. That's just average, how averages work. Whereas if there is a euphoria peak in the next 2.5 months, the price for Arweave could reach that $20 level. So $10 without euphoria, $20 with a heavy degree of euphoria. That's the projections for Arweave's price action in late 2025 and early Jan 2026. And that would still mean that the highs that Arweave made in 2024 would not be taken out. Again, the more time Arweave spends at these low levels or lower price action levels, lower than October 2023, the lesser the chance of Arweave making a new cycle highs. That's just how things work. Again, if the lows are formed in the late stage of a bull run, that's the cycle lows that get formed in this late stage of the bull run, that does not paint a great picture. Again, the 3 standard deviation model, again, if we 3 standard deviation interpretation of the model, that the red line, even if we go by that model by saying that, again, let's increase the confidence level for any ceiling estimate to from 95% to 99.7% to kind of cast a wider net, so to speak. In that environment as well, The 3 standard deviation peak for Arweave estimated by this machine learning model trained on weekly price action of Arweave is closer to $25 during December end. And if we extend it, extend the rally to mid-January, that is coming in at around between $35, so $33 and $35, still would be lower than the weekly average price in May 2024 at around $44. So that's just the interpretation. Again, if you want to see how this model was calculated using seasonal ARIMA, LSTM, and XGBoost related machine learning model trained. Again, these are all in-house models. These are not some prompt engineered machine learning or AI question answers. These are like trained on historical price action, Bitcoin cycles, and Fourier crypto cycle theories are all baked into these models. Again, not financial advice. We discussed the regression model at a daily level. If you look at the candle bodies to identify some of the residuals in a better light, again, as mentioned previously, that $6 level at a daily level would be a key sign to look. At a weekly level, that $8.22 would be a better sign or better price action to look if there is a breakout from that point to get some positive seasonality back. The 3 standard deviation ceiling, the ultimate resistance for Arweave is at around $14. So that's the level to look for. Again, the 3 levels, if we were to kind of summarize this video, the $10 level without Euphoria, the $15, which is the 3 standard deviation regression based target, and the $20 level with Euphoria based machine learning based estimate. Those are the 3 levels of significant importance as and if there is a positive breakout. The model that is kind of concerning right now is the time weighted average price based resistance. Again, this is where the confluence between the Euphoria, the 3 standard deviation regression case, as well as the midpoint of the Euphoria and non-euphoria targets, that is coming in at around $15 level, is also meeting the time weighted average price, the blue line over here, where if the price were to catch up to that time weighted average price like it does in the euphoria phases of the asset class, like it did in 2024, first in March and then again in December. So then again you can clearly see a lower high structure from phase from one euphoria phase to the other euphoria phase. So this time around in 2025 there could be a case where the price barely meets this blue line over here at around $15 level. So that's one way to interpret where the price could go for Arweave. Again, not financial advice. In terms of overall picture or sentiment for Arweave, as the time weighted average price risk is low, but the regression risk is fairly elevated at this point. The regression risk is at around 0.42, whereas the time weighted average price risk is rounded off to 0 as the price is as the time, sorry, this is a wrong chart, as the price is lower than the time weighted average price. The SMA risk, or the simple moving average price based risk for Arweave, again that also helps inform where the price action could go, is fair, as at around 0.21%, so 21%. If it goes to some of the intermediate level between 0.4 and 0.5, the price forecasted is closer to that higher end of that $20 target, slightly higher than that, between $27 and $32. So that's the SMA based projection, which is slightly more optimistic than the other models. If we try to tune out the individual model related noise and try to come up with a model which is more, what you can say, in line with aggregations of these individual risk based model, the regression risk, the time weighted average price risk, and the SMA risk, the weighted risk is at almost 25%. If we were to adjust it for these individual model weights as it is calculated by this methodology over here. If you want to read, you can read it at your own leisure on the website or by pausing this video. The base case forecast for Arweave, if there is a conservative bull run peak, the non-euphoria, so to speak, is at around less than $9. The bull run peak is at around $15. That's the most confluent zone as established by several models. And the stretch goal, or the moon boy peak scenario for Arweave is at around $22. So those are the three scenarios to summarize for Arweave. With that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you tomorrow. Thank you and have a nice day. Bye bye.